Welcome back to the second half of the Future Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. Scott Bauer, the CEO of Prosper Trading Academy, joins us this morning to talk commodities. Scott, happy Tuesday. Thanks for joining us. Overnight, thanks to you, we had some news, some volatility in commodities. Gold as well, up to 1918 and then back down. It's currently trading around 1906, but it really shows a perfect example of why it's important for us to have access to futures contracts.
Oh, there's no doubt about it, right? The news doesn't stop and the markets don't stop. So, you've got to have access, and we do pretty much 24/7. But, in reference to gold, Ben, and I know we broke through that 1900, which was more psychological than anything here. I'm still overall bearish on gold. The bump that we've seen, and it's been a breakout above 1850. Here we are, but this is the classic risk asset, right? And with everything going on right now geopolitically and everything that gold has in its favor, you would think that we'd be approaching maybe 1950, 2000 and hitting those levels that we hit just a couple years ago. And it really can't get out of its own way. And if it weren't for what's going on with Russia, Ukraine right now, where would gold be?
1850 or below, maybe. I mean, 1800 even. Yeah.
I agree. It's in a really tough place. And I think what you saw overnight after the bump up and then kind of a sell-off here is maybe people coming out of gold and moving into treasuries. But I still think that, that gold is kind of stuck here. I really do.
Okay, we're looking at the bigger picture chart here after looking at the run-up that we just saw in the overnight, again up to 1918, and it struggled to really continue or see real follow-through, I guess. It's been running up into these levels and then it pulls back, and it's still holding right around this 1900 level, just above it. So I can understand why it's yet to kind of prove its point yet in terms of this move. I've been talking about those highs that we still have from back in June, which are remain, and then ultimately you can take a look at some hurdles from the beginning of last year, January, up around 1950, and well, the bulls want to see this thing up around 2100. We'll keep an eye on gold here right now, and the dollar as well. Ultimately, those two very closely tied, but I agree with you in terms of some of the worst being out there as far as some of these geopolitical tensions, and with rates expected to be on the rise here in the U.S. soon as March, ultimately, that could provide a little bit of a headwind. Let's talk about crude oil. Is this 100 level inevitable now, Scott? I mean, with the geopolitical tensions, or do you feel a similar situation where crude's kind of overdone it a little bit to the upside here?
So I do feel the same way that it has overdone it. However, 100, that's just, it's like a magnet. I think that is a number you got to short it at, unless there's, God forbid, full blown out scale war, which we obviously don't hope that happens. Again, I think it's sitting in a very similar situation to what we're seeing in gold, and I think it's one you got to be very careful with. I'd have a very tight stop to the upside, but man, I'm selling into any rally that we get.
One thing I've been watching, if we could just pull the chart here real quick, while crude may not necessarily be still or continuing to the upside, RBOB gasoline futures, I mean, prices at the pump, Scott, we're all feeling this right now. They've been on the rise. We're talking $1 above where they were this time last year. As we head into spring, summer driving season, I'd imagine this is going to be a topic for many conversations that we have in terms of inflation and those discussions. I heard ultimately some areas Chicago looking to relieve some of the gas tax, and we all know that's just temporary, much like those strategic petroleum reserves that got released. But this is obviously, again, one of those topics when you're having that inflation discussion.
No doubt about it. RBOB up 4% last week. We're all feeling it at the pump. And like you said, we've got the spring season coming up. Massive demand out there. Supplies, we know, just across the board, not where we want them to be. OPEC not really helping out, if you will. And so, yeah, we can see a continuing of gas prices, and that's not good for the consumer here. We could get a double or triple whammy here with a rise in rates, inflation, more at the pump. So far the consumer has shrugged it off. We're all complaining about it, no doubt. We're all complaining about how much we pay at the pump, but the consumer has shrugged it off so far. But I say we're set up for some tough potential times here.
I would agree. It seems like we're out there spending still. Let's talk about some of the other metals, industrial metals for that matter. Copper, silver. I've been watching copper and kind of thinking it's more a reflection of what we've been seeing in terms of rates on the rise and the expectation that could dampen growth or dampen demand ultimately. And, well, again, it's just not really, it's been sideways for the most part, much like gold had been prior to this geopolitical breakout.
Exactly. And if you look to China specifically for copper right here, their inventories are building. They're building massively. Last week, they were up about 30% just last week at all. And the Chinese economy is just not coming back, not recovering as quickly as ours did. And I think that's really holding a lid here. And like you said, it's sideways. It's really mid-range right now between the October lows and the highs that we saw, sitting right around 4.5 or so.
Yeah. Scott, talk to us in terms of other commodities that you have your eye on. We mentioned a minute ago the impact some of the geopolitical tensions can have on grain markets. We talked about metals, energies. We know cotton, coffee. I mean, when you look at some of the other prices out there, you can understand why everybody's so concerned about inflation. I mean, the trend environment has been to the upside, and it's remained elevated, relatively elevated for a while now.
Right, and that extends back to lumber also. You know, after the crazy run-up that we saw, a year ago, then we saw lumber really just kind of almost crash down, and now it's, back up on the rise, not quite as high as where it was last May. But, man, oh, man, it is really, really through the roof. Builders are having a tough time with that. But I'm really focused on the grains here, especially with what's going on geopolitically. Russia and Ukraine, they're both major wheat exporters. I think they export almost 35 or 40% to all of Europe here. So the pressure is definitely to the upside. I think you can see wheat take out the 860 number, get to those highs that we saw last September. That's where I think that the most volatility can come in, is really in the grain market because of what's going on and because they're such huge exporters.
All right, we'll continue to watch wheat. We'll continue to watch some of the other grains, corn. We'll also keep an eye on beans, which have been rallying up into 16 recently. Lumber as well. Scott, appreciate you joining us here and starting your week with us here on the TD Ameritrade. Scott Bauer, the CEO of Prosper Trading Academy, helping us take a look here at the ripple effect, the impact that this Russia move here over the weekend has on some of the commodities. It's not just the indices, treasuries,